Hello everyone, this is Ankit Kanodia from SmartSync Services. Welcome to the 41st Mission Smile webinar. Specifically, people who are joining us for the first time or maybe who will watch the recording for the first time, just give me 1 minute to just explain what is Mission Smile and what are these webinars. So Mission Smile was started 4 years back. Since the last 4 years, we have been doing webinars every month, either on a business or in an industry. Me or someone from my team, maybe Shivam or Dhruv, we present on a business every month. And apart from these webinars, there are so many other offerings also, which we have inside this Mission Smile subscription. So people who have joined in only for this today's webinar or who have registered only for today's webinar, you can probably get in touch with us to know more about our services. With that being out of the way, let us start today's presentation. So people who have been with us for a long time know that I basically invest in companies which have been doing decent over the years, have a very good business model, and you can kind of call them as quality business or not, if not great, maybe good quality business, right? But when we are into this business of investment education, we have to keep expanding our horizon and look at different businesses and look at different investing style. So don't take this as just a webinar on Ramco Systems. However, I would encourage all of you to focus more on the process in which we can probably look at some of the patterns in turnarounds, right? Because this is also a very interesting theme. I have never invested specifically in turnaround themes. And just to give the disclaimer, I'm not invested in the stock. And as per SEBI's regulation, I'll also make it clear that this is not a recommendation to buy or sell. But through this webinar, we will try to explain what we have learned about turnarounds and what patterns did we find out. And we believe that these patterns are very important when you are trying to evaluate any turnaround opportunity for investing for your portfolio stocks, right? So keep that in mind while you are watching this presentation. And I would also encourage you to keep asking me questions, because it is not just that your questions will resolve your doubts, but it will also help me in understanding this new area of investing, which I've just started looking at. Okay. So can anybody tell, everybody knows this is probably a cliche, turn around, seldom turn, because we all are students of Warren Buffett. We have all read about what he has spoken. We may or may not follow it to the T, but we all know what Warren Buffett has said over the years, right? But can anybody tell why we have put what kind of bird this is and why we have put that bird? If anybody can just share on the chat box, I'll just wait. I'll pause for 5 to 10 seconds just to see if anybody of you got the meaning of this. Wow, great. Amar and Kshitij, you are bang on. So that is what he basically wants to say, that not all businesses, or maybe very few businesses, have that capabilities of rising from the ashes, right? Right? Like the phoenix bird, which is talking about, or which we have presented over here, right? But we also have this problem of being too attached or too influenced by what our investment gurus have said. So like, even if you look at Warren Buffett's history, when he said turnaround seldom turn, he already was managing a large amount of money. Prior to that, when he was having small sums of money, like many of us individual investors, even he invested in turnarounds, because that is where he also multiplied his capital in a big way. What he meant by turnaround seldom turn is that when you have a large enough capital, you should probably seek lesser turnaround stories than, say, steady business stories. But since most of us are not, in fact, I believe in our group, we don't have anyone who is managing money like what Warren Buffett or anyone closer to maybe even 10% of what Warren Buffett manages. So that is why we should come out of that thinking that no, we should not look at turnarounds, right? And that is where we have ventured in this journey. Now, Buffett says turnaround seldom turns. So there are many examples also. Some of the examples, people who have been in the market for long term, maybe 10, 12, 15 years, they would know about these companies. IVRCL was one of the darlings of 2003 to 2007 era. And from 2007 till 2010-11, when the company's position was a little bad, many investors, many even good quality, reputed investors were betting on it, thinking of it as a turnaround story, right? Similarly, ILFS Transport and Jet Airways have the similar. Why I have put IVRCL? Because I have my own personal history with IVRCL. When I was starting up as an investor, as a research analyst in 2009 or 10, in fact, IVRCL was a company where I was also very much betting on. And I invested a small part of my small portfolio at that time. And you won't believe, even till today, I have 50 or maybe 100 shares of IVRCL in my Demat account, just to remind myself how big a mistake that was to keep holding on to this business for a long time, right? So no doubt, turnaround seldom turn. You can see Jet Airways, ILNFS, and IVRCL, how they have performed, right? So this is the area which from 2010 to 12, where many investors were bullish on it because it corrected a lot, but it kept on correcting and it is close to zero today, right? But the other side of the story is something which many people don't talk about, right? And I think Professor Bakshi made this quote very popular. And I read it multiple times in what this gentleman presented in his blogs or in his interviews. Can anybody guess? I think this is a simple question. Who is this? Anyone? I'll just wait for 5 seconds. Okay, so I think nobody knows. I thought that this would be a simple question, but anyways, I'll share the answer. He is Mr. Rory Sutherland. If you want to know about marketing, if you want to know about human psychology, and if you want to know about how it works in businesses, in economies, I think there is no better person than him. And he has written some wonderful books on it. I would highly recommend all of you to. And there are, if you don't want to read the book, there are many videos of Rory Sutherland on the internet. You can watch them. Okay. So yes, and while I was just looking at the chat box, I think Rajiv made a very good point. Success of any investment depends upon the nature of industry, as Warren Buffett has laid more emphasis on industry. That's a very, very, very well-made point, Rajiv. So I agree with you completely. Okay, so now there are more examples also, but just to give you some ideas, the opposite of a good idea is also a good idea, right? You have seen how Inox Wind, CG Power, Suzlon, Tejas Networks, all these companies were written off, right? Just to be clear, I'm not invested in any of these companies. I'm just telling you, giving them as an example, right? All these companies were written off by market participants, thinking that these companies will not do well. But look at how their business have turned around. And naturally, when that business turn around, the stock price also turns around, right? Now, before we get into the main business of Ramco system, I think these patterns are very, very, very important in understanding how successful turnarounds follow a similar pattern in each of the cases. There could be difference in terms of timeline. There could be difference in terms of, as Rajiv rightly pointed out, some industries, in some industries, turnaround can happen faster. In some industries, the turnaround can take a lot of time. But turnarounds generally follow a set pattern, right? So maybe the history will not repeat itself, but it will rhyme, right? So it will be similar kind of patterns for everyone. So it starts with the whole process starts with first a stock price peaks and then it starts falling, right? That is the first step in any business, which before going into turnaround first or before anything happening in the business also, first thing which you will see is that the stock price peaked at a particular level and then it suddenly starts falling. You will not even have any idea why it is falling, right? Fundamental negative news will come much later. It will not come immediately. Okay. After falling for some time, when there is no fundamental news, obviously at that time, many people will enter the stock. And only when the fundamental news comes, and after that, when the stock falls further, investors panic and sell, right? And then the business and the stock remain sideways for some time. That sometime could be few quarters, few years as well, depending upon again business and industry, right? And then suddenly stock price starts moving up. So again, just like there was no known reason for the stocks to fall to begin with, there is no fundamental reason for stock to go up, but it starts moving up. So most of us fundamental investors, especially investors like me, I will probably stay away from a company like this when it will show these patterns, because I'll think that, okay, the stock is just moving up. I don't find any fundamental reason. Why will I buy? Right. This is the mistake most people do, including myself. And then you see restructuring happening in the business, because when the stock price started moving, the restructuring steps are not very clear. They are very fuzzy to begin with. And what is restructuring? So restructuring generally again follow either one or all of these things. First, there will be a management change. The new management will fix the inefficiency in the operations. They will also work on capital misallocation. They will probably sell non-core assets. So even in case of, say, for example, an IT company like Ramco Systems, they will selling non-core asset means what is a core asset for them? Core asset for them actually is their team. In their team, if they find some people who are not needed and maybe the size of the team is bloated and they are facing problem, they'll probably lay off a few uh, employees. Now, I'm not going into the moral side of it, whether it is right or wrong to do, but from a business perspective, that is also a non-core asset, because those people probably company didn't find them very productive for the company and they were still investing in them, right? Now, letting them go is also selling like a non-core asset for an IT company, right? For a manufacturing company, it could be a business division which was leaking money and it was not giving any profits or cash flows or any future growth for the company, right? After these things happen, you will start seeing increasing cash flows. Now, increasing cash flow need not always immediately reflect in the profit and loss account. The P&L may still be bleeding, but you will see the signs in the cash flows. And I'll go to those numbers when we'll cover Ramco system. But first, I'm trying to tell you the whole structure and whole pattern which follows in a turnaround. And then finally, when your cash flows are increasing, you are also helping yourself to reduce your debt, right? One thing which we have not kept over here is, again, some of the companies, they also go for some funding, some outside funding at this time. Maybe promoters will infuse more fund, or they will get funding from other investors, outside investors, or maybe a mix of both. That is also something which happens, right? And as I said, after restructuring is done, then the fundamental news comes in, right? This is how it works. right? So maybe from the period from in this slide, you can see from the period from Jan 2022 to say April 2023, slowly, nothing was happening in the business. From April 2023 to say July, things were actually beginning to work, but it was not showing up on the results in terms of new order wins or in terms of better profitability or anything, right? So the stock is going up and you are thinking that why it is happening, and you would wait for the news to come in, right? This is how Ramco's stock price, long-term stock price has done. So let's focus on post-COVID era. What happened to them? So I'll come to it in detail in the subsequent slides also. But in this slide, you can see after languishing for many years from 2014 to 2017, they had a very good time. And then from there till 2020, they didn't do well. And if you remember post-COVID, just after COVID, all IT companies had a great run for a very short period of time. And again, that brings me to the point of what Rajiv mentioned in terms of the industry tailwind or the industry's situation becoming very favorable. So all the boats were lifted, right? Rising tide lifts all boats. But post that 10x rise, there was something wrong happening in the company, which led to the stock correcting significantly after the 10x rise. Okay. Now we have looked at the general pattern of turnarounds and how the sequence plays. I'll just repeat this. I'll just pause here for 5 seconds for you to understand again. Stock price peaks, fundamental negative news comes later. Investors who would have bought at the top or just after the price corrections from the peak, they will sell in panic because the negative news came just now and the stock has reacted even more after the negative news, right? And the business and stock remains sideways for some time. And then suddenly stock price starts moving up. Only after that you hear about the restructuring news and all those things, right? And then finally, the fundamental positive news comes. The tricky part about this is that by the time the benefits of restructuring appear on the balance sheet and the cash flow statement or the profit and loss account, the stock would be 2x, 3x or 4x from its low, which makes it even more difficult for you as a fundamental investor to buy, right? But in this presentation, we will say that probably, obviously, it would be better if you can buy it earlier when there is more uncertainty, but it's not an easy thing to do. But even at 2x or 3x or 4x, some businesses might be a buy. And you have to train yourself to get out of those anchoring biases, right? So now I'll quickly just go through the overview of Ramco. Just give me a second. So very briefly, it's a global enterprise software company, offers world-class SaaS-enabled platforms and products, and delivers innovative next-gen cloud enterprise applications. So this is very important. Next-gen cloud enterprise applications. There are IT services businesses, and then there are IT product businesses which are into next-gen cloud enterprise application. These are completely two different buckets. You should always understand, right? These are the four major product or segments they are working on. One is the global payroll and HR. The other is aviation. The third is the ERP, which has been there for a long time for them. And the fourth one is logistics. Okay. Again, a brief. It started in 1997, more than 35 plus countries they are in, 1,000 plus employees even today. And their products are used by more than 2 million users. Okay. This is the overview of how geography-wise their revenues comes from. As you can see, APAC region is the region where they are most present, followed by USA and India. Okay. Now let's come to product segments. So global payroll and HR. This is a very big industry. Of course, there is a lot of competition also in this field, but this is an industry where, or maybe let me look at the chat box. There must be some questions before I go into individual. Okay. Yes, Amar, you are right in terms of catalyst. So yes. So in terms of catalyst, sometimes a catalyst could be a new CEO comes in. So then you should look at closely what the new CEO is doing. It is not always that a new CEO will do a good job, but more often than not, new CEO will come with a fresh eye and probably he will or she will fix up the past capital allocation mistakes, right? So that is one. Second could be maybe a fund infusion by the management or by the promoters or outside people, outside investors. That means they are showing some confidence. Of course, these are again times when you cannot basically be 100% sure. So that is where your portfolio allocation works, right? You have to be very, you start very with nimble, be very nimble, start with uh, a very low allocation, and as and when the story progresses as per your liking, then you slowly pyramid your way up, right? You can't buy, like we talk about the stock SIP investing, you can't put 5% in it right from the word go, right? uh, so Jitendra's presentation is going out of screen. Kindly do the needful. I hope the presentation is fine. Okay, so Chiti just confirmed. Yeah, Sachin, you have made a very good point. A possible pattern to study is where Newgen was 2 years back. Exactly. There are many IT companies and companies from other sectors also, which have shown similar kind of patterns. So that is our whole perspective over here. We are not trying to say that buy this stock now or look at this company only. The whole idea of this exercise is to understand that all turnarounds generally follow a set pattern. All we have to understand is whether we are comfortable with this kind of investing or not. And if we are trying to learn about this, we have to know the steps or the patterns. Without knowing the patterns, there is a high chance of making mistakes. That's the only point we are trying to make over here. Okay. So in the global payroll and HR, it's a very highly competitive industry, but it is also a large industry where recently they have come up with SaaS enabled platforms, and the main part of the global payroll and HR thing is that different geographies, different economies have different kinds of rules and regulations. And to integrate all of them in one particular platform is not an easy thing to do. And that's why there are very few companies or few products which are able to cater to so many different geographies. And that is where the new payroll and HR platform, which we'll cover that in the subsequent slides also, which Ramco has built, is giving them an edge against others. Okay. So this is the platform I was talking about. This is Ramco Payce. Okay. So it's again, just like when you look at a SaaS-based company, so there are companies which are from design or from origin, they are SaaS-based. And then there are companies like Ramco Systems or maybe say Intellect Design Arena, where they were traditionally a product-based companies with license revenues. But slowly, they are transitioning themselves from being a traditional product company to a SaaS-based company, right? So that is also an area where to look at. In case of companies which are traditionally IT services or IT product company and moving towards that SaaS-based, if they can manage to execute it well, there could be a good value creation in that process, right? So you can see over here, payroll and HR services in 150 plus countries. So this is something which is a very, very, very big achievement. It's not easy thing to integrate the rules and regulations of 150 plus countries and imbibe that into the product and make it smooth and effortless in terms of onboarding customers also. So in one of the interviews, while I was researching about the business, the CEO mentioned that before this platform, the implementation used to take about 3 to 5 months. It has come down to 4 to 6 weeks. That is how, as in, what do I mean by implementation? Whenever a new client asks them for their services in this domain, earlier it used to take 3 to 5 months for Ramco to set up the initial integration and implementation work, right? After this Payce coming in, it has the turnaround time or the TAT, what we call it, that has come down from 3 to 5 months to about 4 to 6 weeks. And these are some of the features, again, the kind of real-time monitoring you can do. And main is the kind of data analytics possible for organizations in terms of their employee data is very, very, very useful for them, right? The second is aviation. In aviation, the biggest opportunity is in the MRO space. And we'll cover MRO space in detail in the subsequent slide. MRO is nothing but maintenance, repair, and overhaul of any kind of, how do I put it? Maybe aeroplanes or helicopters or maybe drones, right? Or even it includes EV, right? Today. So when it is taking off or landing, that is the time when a lot of MRO activities, as in the maintenance, repair, and overhaul activities work. But the role of Ramco system is focused only on the tech side of it, right? So they are not into the physical processes. They are more into the tech side, and they are more into analyzing and making sure that all the physical processes are efficiently managed and ensure that regulatory compliance and safety standards are also met. Okay, so this again, MRO is a very, very, very useful or a large business opportunity for companies like Ramco Systems. They are, again, this is also a highly competitive field. There are large players around the world working on this. So that is something which they have to keep on working at. This is ERP. This again, I would say ERP is something where it is it's the most difficult part for them to scale up this business, because there are already large organizations in the world with their products available in the market. So this ERP works when they are already providing, it's easy for them to sell their ERP when they are already providing them a very important, say, payroll or MRO related work to the client. And then on the side, they can also help them sell this ERP systems of them. Otherwise, it becomes difficult because already there are so many US based product companies into the ERP space, which have already captured the market in a big way. And the last one is logistics. In logistics also, we are all aware of so many, the whole business earlier, which used to be completely manual, is slowly taking off in a big way in terms of tech oriented. And it's not just about managing the day-to-day operation, but it is also about having a firm grip on the analytics, and which should help them in streamlining and improving their business in per se. So that is why this is also an area which is important for their clients. But again, just like all other segment, this is also a highly competitive business or a competitive industry to be in. The advantage of Ramco system is the kind of collaborations they are doing right now. I'll touch upon the collaboration part in the subsequent slide. So this is the new innovation they have been doing. If you go and check their balance sheet for the last, say, 4 5 years or 6 years, they have invested significantly in R&D. So when I say significantly, I've put the data in one of the slides later, but I just want to put it again here is that on an average 17 to 40% of revenues was invested in new innovation or in R&D. That is the kind of R&D work they have done, and that is one of the biggest reasons for the profitability to take a hit in the last 3 4 years, because COVID came. Many of their previous clients, they didn't honor the contracts they entered into. Some of the clients became lost their own businesses so much that they were not able to afford Ramco's offerings. And then post pandemic, the whole scenario also, the business environment also changed a bit. That is why during all this period, their R&D work was continuously going on. And see, when you are in a look at any product company, any IT product company, when you are building a product, you can't just suddenly stop investing in the R&D. It should continue, right? And when your sales is not moving up, sales engine is not moving up because of external events, and you are continuously investing in R&D, that is where your profitability takes a hit. And that is where Ramco also had its own problem, right? But look at the kind of innovation they have done in the recent parts. I'm not reading out everything, but you can very well understand. And if you have any questions, you can ask me. I'll take that up. So what happened to Ramco Systems stock post-COVID? So 10x rise from COVID lows and then fall off the cliff. But why? So if we try to analyze, so of course, stock will always mirror what is happening to the business. It may not mirror in the same way, as in it may not react at the same time, but it will, in the long term, the stock reaction will always be based on the business reactions. So there were some challenges. After that, there were some turnaround strategies which was put by the management. And now where they are now in FY25, we'll cover all these three things. So what were the challenges? So as I mentioned, high fixed expenses. High fixed expenses is again predominantly related to new innovation and R&D and the team cost related to that. Okay. Increased competition, as again I mentioned in the previous slides as well. There were increased competition in all the segments they were present in, which was not letting them increase prices to sustain their margins. So at one end, the cost was fixed and there was no scope for increasing the revenue. And that is where the margins were hit. And apart from that, there were a lot of pandemic related delays which affected cash flow and revenue recognition, which lead to the kind of results which we have seen in FY22, 23 and 24. Okay. So now what was the turnaround? What were the main turnaround strategies? So first was to put things in order. So this operational improvements which you see at the end, that was the first thing. They did a lot of streamline over there. They laid off a few employees. They also took a bold step of increasing the prices of all their products across the board, which was a bold decision. And it actually worked for them because they didn't lose much business because of increasing their prices. Plus, they did something new, like strategic partnership. So they partnered with the big fours like Deloitte and all, who are already serving customers, serving to the market, which is their target market. So when you partner with them, it is easier for you to increase your sales, right? And then focus more on high growth areas and large order wins. So I'll cover one of the large order wins recent in the subsequent slide. So these were some of the turnaround strategies which took its own time, and still I would not say it has reflected completely in the numbers. But now we are slowly seeing the ship being steered at the right direction. Because if you look at the last 4 quarters, 6 quarters, you will steadily see that the losses are going down, and at the EBITDA level, they are turning positive, albeit very small amount, but they are turning positive. And even if you, they didn't do any con call in Q2, but if you look at the management commentary, they are very clear in the sense that they are now in the turnaround or the recovery phase now, where in this year, by the end of this year, they expect the profitability to come maybe by Q4 or Q1 of FY26. The profitability will come in a big way, right? And the most important part is the unexecuted order book of $180 million, which is a very positive sign. So if a company can still continuously bag new orders, and on top of that, some of the orders are really large orders, like one order of the Korean Airlines is north of $10 million, and it should be executed over next 5 to 7 years. So that gives you a lot of visibility, right, for the revenues to kick in. Now look at the financials. So as we have now understood what has happened to the business, what were the strategies management were following, and so this you can see over here from March 2020 to March 2024, the revenues have gone nowhere. It is static, almost static. It went up a little in FY21 and then went down, but overall in the last 4 years, there has been no growth, right? In terms of operating profit, you can see that it witnessed a big nosedive in FY22 and FY23 and also FY24, right? But if you look at the last 2 quarters of FY25, that gives us a good indication that probably they have taken all the hits which they had to take. So in case of FY23 and FY24, the majority of hit is because of the write-off of receivables. And because those receivables, and what were those receivables? These were receivables in terms of projects which they got just after the COVID time, or maybe just at the time of COVID, where the customer gave them the order, and due to some problems from maybe the customer end or maybe the company's end, there were execution delays. And then later on, the customer didn't honor the agreement in the sense that they scrapped the order. So that is where you had done half work. You were supposed to, you billed them for that work, and you were supposed to get revenues for that, realize the collection for that. But later on, when the project itself is getting scrapped, definitely the customer will not pay the full amount, right? They will attach some penalty or some provisions will be there in their contract, which will penalize you. That is what they have faced. But all the hit they have already taken in FY20, majority of the hit they have already taken in FY23 and FY24, because in this year, you don't see that kind of write-offs. And you can see over here, because of those losses, the reserves got depleted from 621 to 276 crores. But from here, see, it fell from 621 to 550, then 498, then 276. But over here, it has stabilized, right? So in case of turnarounds, you have to look at these kind of cues where the reserves were falling, and now in the last 6 months, they have stabilized. Right? That is one indication. Borrowings are slowly going down now. So it peaked at 100 crores in March 2023. From there, it is coming down, right? Look at the receivables. In the last 2 years, actually, the working capital has actually added to their cash flows. So you can see in March 2024, even though on profitability terms, you will see a negative figure. Like I'll just go back into the previous slide. You can see in March 2024, it was 244 crores of loss. But still on an operating front, they are at 100 crore cash, right? So what it means is that they worked on the working capital situation, specifically in the receivable side. A part of it was done through write-offs, as in they did a massive write-offs in FY 23 and 24, and that is why the receivable numbers have come down. And now look at the debtor days. It was at one point of time 122 days. It has halved to 66 days in March 2024. Of course, this number we have to track the current year as well to see whether it was a one-off thing or it is continued in this year as well. Okay. Now, what is the investment thesis in this company? So first is the turnaround story, which we talked about, that the stock has already followed that pattern. What was the pattern? Number one, it hit a peak. So 10x rise was there from 2020 to 2021. In that 1 year, the stock rose 10x. After that, the stock price fell. The stock remained sideways for a long period of time. Some turnaround strategies have been followed by the management. And now the stock has slowly regained. So from 200, close to 200 in March 2023, it is already above 400. So it is a 2x from that level. So all that patterns which we discussed in the previous slides, that is already playing out over here. Order book strength, I've already covered. Okay. Now let's come to macro factors and other things. So this announcement was done by the Ministry of Civil Aviation in July 2024. See, again, these kind of sectoral tailwind typically starts with the government boost. When government boosts a particular sector, we have seen that in several other industries. In our 40th webinar, we talked about sciences. In sciences case, again, we referred to a government circular where they were made very clear that they will make GIS data available for only Indian companies free of cost and in a very comfortable way. And they'll make sure that it is done in a fast track manner. That was the first. So, of course, we looked at it at a much later date, but people or investors would have looked at it at the time when that kind of government push came. That is the time you should be very keen on looking at that particular sector and looking at some of the businesses in that sector. So this particular announcement by government on the MRO and aviation sector, where the government says that India aims to become leading aviation hub with $4 billion MRO industry by 2030. That itself gives you a first hint that this is an industry you should take care of or try to pay more attention to it. And similarly, then look at the companies in this domain, right? Now, when you are investing, before I come to this slide, I'll just read out on all the other investment thesis factors. So project improvement, they have already done in terms of cost optimization and efficiency gains, both in terms of wherever they've found that there could be, they could replug some of the teams and processes and resources. They have done that. They have taken the price hikes in all their products. They have launched new products. Macro factors we have already covered in terms of MRO and aviation. Turnaround story also we do. Now, when we come to valuation, see, valuation again, academically, you can do DCF. Academically, you can talk about P ratios. But in real life investing, you have to look at the whole picture, and valuation becomes, I'm not saying valuation is not important, but valuation becomes more of an art than science. So you can't just assign a number based on which you will buy a company or not. And specifically in case of turnarounds, what you need to do is that you have to focus more on the direction and the velocity of the turnaround. Just because the stock price was crashing earlier, you cannot buy. And just because right now on a PE basis or on a price to sales basis, it may not look very attractive, you cannot discard the company. Now, first of all, understand, because in FY24 also the company had loss. So PE will not work over here, right? And even in case of price to sales, if you look at the journey of Ramco system, 3 times price to sales is not very attractive, right? It is somewhere in middle of very attractive and very expensive. So I would say 3 times price to sales is, from a strictly on a valuation perspective or valuation history of Ramco system, is par valuation for them. But what can happen in a turnaround case is that from here, because till now profitability has not come in the books. Now, if because of the efforts, recent order book and new order wins, you will see probably sales growth also kicking up in the subsequent quarters and years. There could be margin improvement also, because the kind of write-offs they took in the last year and the year before that, they will probably not take in FY25 and FY26. So your sales growth will be, even if it is 10 to 15% or maybe 20% sales growth, there will be margin improvement. That will lead to some profitability at net PAT level as well. And when you then apply a multiple there, then it could become a big story. But the whole thesis still lies in the execution of the company. If they don't manage to execute their orders in a way which they have done in the past, they will find themselves again in the soup, and this whole investment thesis will turn on its head. So that is the dilemma when you invest in turnaround companies. That is where you have to live with it, and you have to slowly calibrate your portfolio allocation in businesses like this. One good thing for a company like Ramco System right now is that you look at all the IT platform or product businesses, they are all trading at at least more than 5 times price to sales. Some are trading at even 8, 10 times. I'm not saying Ramco has the capability to reach to 8 times or 10 times sales anytime soon, but 3 times is something when you compare them with peers, and specifically peers who are probably moving towards SaaS-based business. So they are having even something like an Intellect Design Arena. It used to trade at 5 to 6 times or even more sales. Recently, it has come down, and even today, if you look at I think from their standard, they are now at a slightly depressed valuation, and even then they are at 4 times price to sales, right? So that is where you can see some comfort on the valuation perspective. But if you ask me, I would say, rather than that valuation number or the price to sales figure, or the price to sales of 3 or 4 or 5, focus more on the direction and the velocity of turnaround. Direction is whether the recovery is still in that direction, and velocity means how much of growth you can see in the sales, margins, and finally profitability. So there are some green shoots in terms of cash flows becoming healthy, debt coming low, last 2 quarters EBITDA turning positive. So all these are directionally giving you some confidence, right? And one thing which also has worked for them is, or I would not say worked for them, but I would say as an investor, I would also try to see is investment in R&D. So they have scaled down from 44% in FY23 to 15% FY24. This is also one figure which we have to keep on monitoring going forward as well, as to how they progress over here. Now, this is the last piece of the puzzle, which is management. So this Mr. Sundar Subramanian has a very good illustrious experience in working at actually leadership positions for companies like Emphasis, Cognizant, IBM, and PwC. So he's a perfect choice for a company like Ramco, where it was struggling, it needed a turnaround, and he has immensely helped the company in terms of recalibrating the performance, stabilizing the processes, containing the cost. There are a few videos of Mr. Subramanian on the internet also. I would encourage all of you to watch that. And but there is one twist. So as we say, but कहानी में एक twist है. Twist ये है कि now Mr. Sundar, who just joined in 2023, is supposed to step down as CEO in January 2025. And promoter's son, Mr. Abhinav Raja, he's the son of company's founder, and he'll become managing director. I think he's either already become, or he'll become in January. And even though Abhinav Raja has been in strategic role with Ramco for 5 to 7 years, he was just a whole-time director. CEOs have always been some outside person who would be taking the call. But in the con calls, you would see him taking the first. He would give you the background about the company and vision about the company. But then when it comes to nitty-gritties, it was always the CEOs who would take care. So this is a surprise elevation to directly become the MD of the company. But don't think that he doesn't have any work experience or any this thing. So if you search more about him, he co-founded a very unique uh, startup, basically, which is into retail distribution, logistics. So it was a logistic company, Link, which was recently acquired by Swiggy. They have not specifically disclosed what is the amount or what is the valuation, but Swiggy and acquiring them in retail distribution tells you something about the capabilities of this company. So this gives you some comfort that he has already been on the board of the Ramco group. He has been in the strategic role, but it is not just that. He has also been able to execute work in this field, in a similar field, because Ramco also has a logistics division, right? And his own company, which was into logistic, was acquired by Swiggy recently. Okay. Now, this is something we should also keep in mind. I will not say that all second generation founders will do well, but there have been many incidences where second generation have taken company to new heights. So if you ask me, probability would be higher than lower when a new blood, when a new person comes from the family, specifically from the new generation. We have seen that in many sizes of companies, be it small cap, be it mid cap, be it large caps. So we have just shared few examples. So let me just take an example. VIP, which is now not doing well because of the problems of too many MDs changing in the last 3 4 years post COVID. But if you look at the history of VIP, when Radhika Piramal, daughter of Dilip Piramal, joined the company in 2011 or 12, from 12 to 2018-19, that was the best period of VIP's business. Same I don't need to speak about Eicher Motors because we all know about the story of Siddharth Lal. Similarly, with case of Reliance, when Dhirubhai Ambani passed away, unfortunately, there was concern that whether the new generation will be able to take it forward. But look at where Reliance is today. Right. Same is in the case of Bajaj Auto, CCL. In case of CCL also, when Mr. Challa Srishan took over from his father, he brought in a completely fresh level of commitment to the company. And look at where CCL product is today. Right. From a B2B company, it is beautifully transitioning itself to be a B2C player as well. Same is the case with Apotex. See, I'm not trying to say that just because these are the examples, you should blindly think that Ramco system will also see the same fate. There are, as I said in one of the previous slides, the opposite of a good idea is also a good idea. The opposite also happens. Sometimes the second generation don't do well. But there are more cases of second generation uh, promoters taking companies to a better height. So that is what I wanted to highlight over here. Now, you can't finish a presentation without this important slide, which is the risk. The business continues to be R&D heavy. So the R&D heavy is a double-edged sword. If you do invest in R&D, if you find good products, it can put you into a completely different orbit. But you can't be sure of those R&D, right? If a business needs that R&D, or maybe you can look at these R&D as capex. So it's a capex heavy, just like a manufacturing business will always be capex heavy. So that capex will not always immediately give you return or give you returns at a higher rate than your existing rate of returns. So that is the problem with R&D heavy IT businesses also. So we have to keep a close track. And unfortunately, as investors, we will not get complete details about these R&D, right? Because we are not tech specialists that we will be knowing that this kind of R&D is going to reward them at this point of time. So that is where the uncertainty comes into the picture for us. Intense competition, I've already talked about it, because all these markets are uh, the target market for them are all big markets. So there are definitely more competitors. This is a business where employee attrition, their dependence on a few important employees is very high, and employee attrition can be a big problem for them. They face this issue, which happened with a lot of IT companies just post the pandemic, where because of high wage possible in competing businesses, so many employees were shifting their jobs, right? So that risk is not gone away. It still stays. They have to, it's a big challenge for a company like Ramco to retain employees or retain good talent. Working capital intensive, I've already covered that. And then Forex risk is, we are all aware that since majority of the business is through export, so foreign currency movement is also something which we have to keep a track. But the last one, and probably the most important one of the most important one, is the new jockey in terms of Mr. Abhinav Raja joining the business as an MD. So that is something which is, it could be an opportunity, it could be a risk also. So while I have talked about the opportunity with that, I'm also going to talk about it as a risk. You don't know how he will perform. So you have to keep a very close track on this. So with this, we come to the end of the presentation. So as I promised at the start, in 1 hour, I have completed the presentation. And I'll just repeat the disclaimers. I don't own the stock, and this is not a recommendation to buy or sell. And the whole idea of this presentation was just to give you, in fact, not just to give you, but to learn myself as an investor also, what are the patterns of turnaround. And maybe after going through this exercise, maybe in future, sometime I'll be able to bet on a turnaround opportunity as well. So that's the whole purpose of today's presentation. I hope you would have found value to it. Okay. So I'll now check the comments. So Rajiv asked this question: why did Sundar Subramaniam step down? Did his term end? So the recent notification by the company clearly says that Sundar Subramaniam will step down in January. So there is no clear cut communication either from the company side or from the side of Subramanian, why he's stepping down. I have no idea about that. And probably in the next con call, we'll be able to ask the management regarding this. But as of now, this is the only thing which we know is that the company has informed the exchange in this month only that, in fact, in the last few weeks only, that the term of Sundar Subramanian will end in January 2025. That means in the next 2 months. So, yeah. So outstanding order book. See, this question, I have a total number. They have not declared in detail as to which orders will take how many years. Even if you go through their recent con calls, they have been very protective about sharing those details, maybe due to competitive reasons. But what they have said is that there are few orders which are 5 year, 7 year order, like the Korean Airways order, which they have got, and it is north of $10 million. So even if you take $10 million and 5 to 7 years it will take, but it will be front loaded, means 40 to 60% of the work will be done in the first 2 years, 3 years itself. Okay. But I can't, if you ask, to be very honest with you, I can't have the very clear estimated revenues for the whole order book because they don't provide those kind of details. They have not given any sales growth visibility. In fact, if you look at the management's presentation in the means communication in the recent past, they've always maintained one thing is that their first focus is to become profitable. So they have just become in the last 2 quarters, they've just become EBITDA positive. After that, they will focus more on getting to the level of past profitability and then look at growth. So they are not giving any guidance in terms of how much would be the growth. So our idea is today is that even if the growth may be a meager 5% or 10%, the main kicker will come from the margin improvement because the kind of write-offs they have taken in the last 2 years and they have stopped taking it in the current year. The EBITDA margin and the final PAT profit should increase in FY24, FY25 and further increase in FY26 if they continue in this fashion. Okay. Let me just check more questions. So I think Sagar has a lot of questions. Yeah. So thank you so much, Sagar and Parijat, for your kind words. So now, what is their geographical mix of products? So I think I just shared that. I'll just refer to that slide again. It was here. You can see here. This is their geographical wise revenue. So APAC region dominates, then followed by USA and India, then Middle East, and then finally Europe. So go-to-market strategy, any partnership with peers or system integrators? So yeah, this is a very important question. I briefly touched upon that in the presentation. So they have now collaborated with big fours like or consulting firms like Deloitte, where these kind of large firms already serve their end customers, as in Ramco's end customers in the consulting domain. And then Ramco joins hand with these guys to integrate their product while the consulting firm gives their consulting, they integrate their products with their consulting. So which is a very good collaborative strategy, right? Where it's a win-win for both the consulting firm and also a company like Ramco. Who is the target market, SMEs or large enterprise? So in case of aviation, there is no SMEs in my understanding. All these aviation companies, specifically aviation companies in the Western region or in the other region of the world, you will definitely not find SME companies in the aviation region, and most of their projects are aviation companies related projects. I'm talking about MROs over here. But in terms of the payroll, so in case of payroll also, generally the kind of integration costs and the scale which is needed for these kind of products larger organizations are more likely to look for their products. And the target market I've already shared in the presentation. Gartner or any analyst rating, they have recently got a few awards in several markets, but I couldn't find Gartner thing. And I'm sure Gartner would be the one of the best thing to have for them. But right now, I couldn't find anything. As on date, I don't find anything on that. Okay. Yeah. So thanks, Harshal. So this is something which we missed adding to it. Recently, this was again very recently, Ramco System awarded multi-year Canadian federal contract for its aviation software. So that gives you some idea as to the kind of projects they are getting. Okay. Now, how much of their revenue is SaaS versus license? How is it? So again, they have not shared the exact numbers, but SaaS percentage versus license is very low at the moment, but it is going to increasingly improve going forward as their focus will be more on getting SaaS-based customers. Okay. What kind of people have they been hiring recently, if at all? Are they ramping up on the sales delivery? This question I'll need to check and get back to you. Okay. So it's a mix of that. In question number 7, where you ask about the order book of 180 million USD comprise of all new license and SaaS wins, or does it include AMC from existing clients? No, it includes AMC also. And do we have the break? No, no breakup is provided by the company. So that is where. So these kind of uncertainty remains because you don't have all these details. Maybe as and when the execution starts picking up, the number starts flowing in, company will have more confidence in sharing these details. But as of now, they are not sharing any more detail. So you can take this as also as a gray area, as in we don't know for sure what is going to be the execution and timelines for these kind of orders. Okay. What could be the reason for the 1 year 10x kind of run up? What were the promises done which led to it? So Lavanya, this is a good question. So you look at any industry, whenever an industry sees a big tailwind. So like in case of COVID time, see now we have the benefit of hindsight that we know that things have come to normalcy. But at the time of COVID, when it was under the way, there was a well, and market always reacts in terms of what is current perception of investors in general. So the current at that time the current perception was that everything will be IT. You have to work from home. You have to manage everything from products which do not need physical or manual intervention. That led to a huge uh, re-rating in IT stocks the whole basket of IT, be it any company, be it small cap, large cap, mid cap. Of course, small and mid rallied more than the large companies. Similarly, in these kind of situation, companies, whenever these kind of uh, sectoral tailwind comes, you make more money, or generally if the stock, you have to talk about stock which has not been doing well, or the business which has not been doing well in the past, will probably rise more because that is already depressed and under owned by the market, right? So you will find more interest in those kind of companies. Some of the celebrated popular investors also took stake in the company, in the stock of Ramco System at that point of time only, because the whole sector was going through. So this offers more value. Okay, but that is just rising tide lifting all boats. Post that, it is all your execution. If the company fails to execute, like in what it happened in case of Ramco, it failed to execute, and that is why they have not performed well after that, right? Uh, so Gangesh asks, does they have their own product or they are like service-based company? Why would they take 5 to 6 years to complete $10 million order if they have their own solution ready? So Gangesh, the product is their own. It's not that they are a service-based company, and why this R&D expenses are high, because they've been building their own product. It's not that they are outsourcing the product work to some other agency, and this being a very only a service-based company. That's not the case. Uh, 5 to 6 years is not just based on the quantum of the order. It is based on the scale of the project. It's a business. It's a very old uh, Korean airline company, which is overhauling its whole legacy system. So it will take its own time. And it also includes the maintenance and all. And as I said, 40 to 60% will be booked in the first 2 years itself. Rest part of the order is more on AMC, and that is why it will continue after that as well. Okay. What is the revenue recognition policy? Is maximum of it is recurring? Is it Excelia in the same business? I heard you attended their con call. Any insights? Too many questions. Wait, I'll first focus on the revenue recognition policy. So revenue recognition policy, again, where like you see in a lot of IT companies, which serve customers, and they bill based on timelines. If you look at Ramco also, they also did a lot of that thing. And when you bill based on execution and milestones, what happens is that there is also a unbilled revenue which kicks in terms of the part of the revenue. And that is where in case of Ramco, what happened is that they had to write off some of those unbilled revenue because they either lost those clients or those customers scaled down the order, right? So that was the reason why they faced that. In terms of recurring business, the recurring revenues have started kicking up as per the management's version in the last couple of years, but it is still early days. It will take its own time to find a larger share of the total revenue. Excelia is a very focused company. They are more into the accounting part of the things. That is also an interesting company. But again, just for the disclosure sake, neither I nor my company have any stake on the company of Excelia also. But we are keeping a close watch there because, again, that is also a business which is definitely going to be a beneficiary of the sectoral tailwind. And Shivam had written a couple of blogs on that. Maybe Harshal, you can share the link of that in the chat box, and you can, if anyone wants to go in depth, you can read them, because I think he has done a wonderful job of explaining the business model of Excelia and how it can be a good business to look at. But again, repeating the disclosure, we don't have any holding in the company as of now. Now, I think there are few more questions. How you see CEO is stepping down again? So I have covered that question already. CEO stepping down, we don't know much about it. It is a surprise. Someone who actually was doing a good job, why he's stepping down? Maybe he got a better offer from other company. Maybe he was told at the start of joining only that you will probably your uh, employment will be only for this particular project of stabilizing the company and improving the. I have no idea. Maybe in the next con call or whenever next communication management does, we'll be able to get to know. Okay. Now, Akhilesh makes a point. Let me just read it out. R&D intensive IT product companies such as Ramco Systems, Intellect Designer can face significant challenges before eventually turning around, leading to dramatic revenue, profit, stock price growth. This is common phenomenon in tech and many R&D heavy. No, however, okay. Yeah, so I think there is no question over here. Yeah, so yeah, point taken, Akhilesh. When these companies successfully innovate or capture a new market, their stock price can increase exponentially as investors recognize the potential. Yeah, and it reminds me of Intellect Design Arena. From 50 rupees, it went to about 1,000 rupees. So 20 bagger in, I think, 12 to 18 months, something like that. From March 2020 to September 2021, travel from 50 rupees to 1,000 rupees. It has come down after that, and then again went up and again came down. But completely agree with you. So basically, more money is made when there is a transition and happening. So both in case of intellect design arena also, they were also R&D focused. They were doing huge investment in R&D and product development. It took them 4, 5 years, 6 years for their project to be acceptable in the market, and that is when we saw the market accepting it. So either you wait for them to come up with that product, and as in the product getting accepted in the market, and wait for the right opportunity in terms of valuation, or you be patient and keep buying them regularly if you think that those things are, or these things are very difficult to gauge in the early stage, and that is where a sound portfolio allocation principle is important. Okay. So what are the other turnaround we are currently watching? Maybe we can take this up offline, because we don't want to talk about individual stocks, which may look like basically a recommendation. We presented on our turnaround story recently in Alpha Idea, so I can speak on that. Again, a disclosure: I own the stock. We have recommended to our clients, which is tiny, small, 400 crore real estate EPC to real estate company, which is Atlanta. Don't take it as a recommendation. Probably we are early into the company. The things will take its own sweet time to work. We found the valuation very attractive given the kind of opportunity and the kind of projects they have. It's a very highly risky bet, so don't take it as a recommendation. I have a very small allocation of my portfolio into it. But since you asked about the turnaround stories, I could say one company, because we have already presented on it in a public forum. There are a few. Maybe you can get in touch with us and we'll discuss. Yeah, Sachin, that's a good point. I think that could be because the Ramco industry group is itself going through a restructuring. You could see, and another beneficiary of that could be Ramco Cement also. And in fact, the stock price has also started, because in case of cement also, the industry-wide consolidation is happening, and Ramco Cement is also a company which is probably a much better company from Ramco system compared to the kind of execution they have done in the last, say, 15-20 years. So that is it. So I agree with you, Sachin, that could be one of the reasons. But as of now, I don't know, so I can't say anything for sure. What was that stock? Gangesh, I didn't get your question. If you're talking about Atlanta, it is ATLANT followed by 2 A's. Atlanta. That was the stock. Is there a blog or Atlanta too, Ankit? So, Amar, I'll share with you the PPT, because that PPT has been shared anyways by the host of the Alpha Ideas. So I can share that with you, no problem. Yeah. So Ramco Industries. Yeah, Avdut, I think you have raised your hand. So let me just unmute you so that you can ask your question. Yeah, Avdut, you can go ahead.
Ankit bhai, can you hear me?
Yeah. Loud and clear.
Thank you for the presentation, Ankit bhai. So if we look at the overall verticals, and I know in the group now also we have people working from the industry like Amar or Sachin ji, or our own Akhilesh bhai is also there. They know these businesses far better than me, at least me. You could be having a higher grip of the company, but how they grow, if we look at 4 verticals, right? First is ERP, then logistics, then I think third one is payroll, and fourth one aviation. So if we look at other 3 verticals, first 3 verticals which I mentioned, there is huge competition to this company, right? If we look at it, then the remaining is the aviation. And if I remember correctly, you mentioned both the orders, Canadian one and the Korean one, both orders are into this vertical only, right? So again, now if we dissect it further, as I think Sagar had also mentioned is in comment whether it is a license link it is going to be or the SaaS. Sachin ji also in their comment mentioned that turnaround of new gen where it happened, company moved, if I remember correctly, company moved from the license link to the SaaS. That's how the turnaround happened over there. So if we get idea about these two things, how large these contracts as compared to the current revenue and pipeline, if we can get it, not that's another part. But as of now, we know this as compared to their revenue, and if it's going to be SaaS or one time kind of revenue, then it's clear, it would be clear case. And we have to, of course, we have to keep tabs on those customers going further. They also do well. Canadian Airlines and Korean Airlines, if they perform well and money keeps flowing through, I think then our case will become strong into investing into this company. If we can get Sachinji's and Amar's insight on that, that would be also helpful for
No,
us.
that's a very, very, very valid point, Avdut, you mentioned. Before I ask Sachinji and Amar also to respond to that, I'll just make one point that, see, we can all get that patterns like what happened in case of Intellect Design Arena or in terms of Newgen.
Correct.
But to get that kind of confidence that exactly it will follow the same pattern is very difficult right now in this company, because first of all, they are still not out of their worries. They are still
Yeah.
grappling with it, and they are
I
not
understand.
sharing. Because of that, they are not sharing data.
I
So they're
understand.
not giving enough information about the composition of the order book, right?
Oh, so that's where the industry people will come in help,
Yes.
right?
Yes. So, Sachinji, if you can, I'll just unmute you. If you would like to just share your view. Yeah, I've unmuted you.
Yeah, sure. No, thanks. I'll try my best to answer that angle. Yeah, I think there is one very important difference in the pattern in Newgen versus this. Newgen was a licensing product company and now is obviously become, more SaaS based. But also remember, they had a very, very important tailwind, which is the TAM expansion. Their overall market itself expanded in a big way. So just for, I don't want to complicate this as a topic, it's a technical angle. But if you think about it, they used to be, first of all, only in APAC and very much India and Southeast Asia centric. They expanded geographies in Europe and US, especially US grew very big for them. In fact, even 2 weeks back, I helped their group CEO hire the European head. Actually, he's a friend of mine. Uh, so just now they have expanded into Europe, right? So had a big TAM expansion from a geography. They had a TAM expansion also from the product lines which they launched. So they were very smart about it. And most importantly, the difference in pattern is they were profitable. They were never a loss-making entity. They were always a very conscious profit-making entity. For a profit-making entity to turn around, grow is very easy. Same with Intellect Group. Intellect Group might have had, let me say, not net profits, but they were still very EBIT positive, EBIT profit.
Yes.
And Arun Jain ran a very good company. He knew how to do it because of his past history with Polaris and all. So there was a very clear founder-led turnaround in both the companies, and both the companies had history. Their founders itself have turned around enough companies, so they know how to make that engine work. In Ramco Systems, you have to realize there's a big challenge. The previous CEO who was brought in before the current guy quit was a gentleman called Virender Agarwal, and he was ex-HCL, ex-Satyam, Tech Mahindra, very seasoned guy, but he went very aggressive. He launched the aviation business. Because he thought aviation business will be something, and in his past life, he actually did that aviation business. He also had a very strong affinity in Asia Pac because he ran Satyam's Asia Pac business. So now the question simple, rather than trying to worry about SaaS versus this, those are easy things actually. The big question is first, are they able to expand beyond Asia Pac? That's going to be the number one question which they have to be able to do. Number two, they have to cut down products rather than going after so many things. So they have no synergies between their service lines. There is no synergy between aviation, HR, and all their products, right? It's all over the place. I think they will do well to decide to double down into one or two areas to cut profits, and it'll actually be the best thing to happen. from a turnaround point of view, if they are able to cut down 1 or 2 areas, save cost, at least don't spend on R&D in those areas and shift R&D to the 1 or 2 strategic bets with this, which they should take. Another third thing I would say as a big trigger, we should note now Abhinav is coming in. He's a very good guy. I have known that team also for a long time. He's part of the family. So now there's a vested interest. Now, no family CEO will ever want to feel bad. He can't come as a third generation CEO and screw it up now. So in fact, I feel that's the biggest trigger. That's the most positive trigger I'll see. And he's not somebody who's come in without learning. He's been put on the sidelines for almost a decade plus by his father. He's not been given the perch without hard grind. So it's a good thing. It's a very good thing that Abhinav is now going to put his vested stake into this full time. Finally, think about it. Having great lineage, great industry group, fantastic pedigree, why would the CEO of the group not bring in his own son for so long? I think that's actually shows that they are now ready. I think there's a part of group restructuring, family restructuring. They will take the right steps. Everybody wants to become bigger. I think that's a very positive, soft trigger. Uh, I think those are my 2-3 points here. So your product licensing, servicing, honestly, I don't think is a big trigger here because they're already a SaaS company. They're not anything. One angle which I'll talk about, which hopefully they will address, and that we should say almost 95% they will address is technology disruption. This HR world is going through massive change, in terms of products and all of that. So they're competing with Workday and a few others. But I think that's not my worry. Every company will go through the same disruption. There's something what I would call a macro disruption at the technology level, which every company will go through, and every company will do what they have to do to balance it and make it out right. But I think that's my quick commentary, uh, Ankit, and the question. Yeah.
Thank you so much, Sachin. That was very, very, very helpful. And so that I think I don't know whether Avadut is unmuted or not. Avadut, let me have. Yeah, Avadut, I've unmuted you again.
Yeah.
I
Yeah.
hope that answers your questions perfectly.
Yeah.
It-
That's how industry experience come into play. That's why
Yeah,
we want to know his opinions on this.
yeah.
Akhilesh Bhai
Thank you.
also has. Thank you, Sachin ji. Thank you so much.
Thank you. Thank you so much. Yeah.
Thank you so much, Sachin, as always. I think Sachin, you can take another session maybe again to generally touch upon the IT space because of your rich experience, not only as a person who has watched this space closely inside, but also as an investor. I think
Yeah,
that
yeah,
will be helpful. Whenever you are free,
absolutely.
we can do that.
Yeah,
Okay.
happy to do it. Actually, there was one question, right? I'll just proactively answer this. I
Sure.
know there was an angle. So you must have seen Sagility as an IPO which went live a week back or 2 weeks back. And Quest Corp is in a similar business.
Yes.
And you will all see that suddenly all the BPO companies, BPO companies are all going, IPO / they're trying to do dramatic changes in their business models. That's a space which is absolutely super important to watch out for if I'm a market disproportionate change that will go through disruption. So if you have the stomach to face the disruption for the next 1 or 2 years, but that's it. It will take a disruption, it will take a dip, and then it will see a very big rise. Because what is happening is the industry itself is getting disrupted. The BPO industry itself is going to go through dramatic change. This is a rare occurrence which happens possibly once in a lifetime in an industry where the industry itself, it's like saying low cost airlines came into airline industry. So that was the kind of disruption movement. These companies are high PE sometimes. Sometimes they are, and Ankit, you brought out one equivalent company, like in the case of Sagility, they compete. You studied, you put a blog on a company, MediAssist and others. Think of them doing this for global companies. MediAssist does it in India, third party administration, they do it for global. But
Right.
the power is all these companies are today being seen only as services for third parties, for other companies in international globe and United Healthcare and others. But just think of them as, for a minute, equivalent of a MediAssist. Mediasis operates at a 90 PE. Of course, it's a high PE company today because everybody sees long-term value in that. But if there is a disruption, the Mediassist equivalent of global operations is this kind of a company. So those are the sector I've never seen in my 27, 30 years that an industry itself is getting disrupted in technology, which is a very rare phenomenon. Very, very rare. Incremental changes come in, new technologies come in, but an industry going through such dramatic change is rare. So I'll just leave it at that. Yeah.
Thank you so much, Sachin. That was very, very, very helpful. So, any other question on the chat box? Let me just check. Yes, Akhilesh, I am unmuting you. Yes, Akhilesh, please go ahead.
Yeah, thanks, Ankit. Thanks, Sachin, for that perspective from the IT experience that you have brought in. Another thing is, I don't know whether many of you have seen the profile of Sundar. Sundar has been into this industry for long. He was global head for delivery for Cognizant Technology Solution as well as for Emphasis. So he brings a lot of experience into this. As you were rightly saying about the SaaS and the profitability of these R&D led companies. Maybe this company is not profitable, but they have a group company which is highly profitable, the cement business. So I don't think the finances wise they will have problem in terms of profitability or not. What they are doing currently is something. If you have read the Ekans Mittal's recent tweet on MRO industry, all of you must see that. I think some of the ideas that he has taken is there are verticals where n number of companies will be gaining the ground after this announcement from Government of India, and some of the large companies like Honeywell, they are partners of Ramco Systems. So we have to look at the triggers also from that perspective, that who are the partners who will take your products and take it to large OEMs in terms of say these Airbus or even to Boeing or so many other, because Honeywell is a company which supplies their product and services to all these big giants. So if they are their partners, they can take your products to these companies much, much faster, and you will have a great revenue which can come in for you in future. More than that, there are large IT companies as well as audit companies or consulting companies like KPMG and Deloitte, which Ankit mentioned. Oracle also is a partner, by the way. It's a product company, but they are partners of Ramco Systems. So I see a big synergy in terms of partner ecosystem that they have built in. Plus, they have a group company which can give them a lot of funds whenever that is required. So that will not be a problem. So there are enough triggers for this company.
Yeah. Thank you so much, Akhilesh. That was also very insightful. So, I think with this, we come to the end of the presentation. There were a few questions related to uh, Atlanta, and maybe we have a video on that. So we'll record a separate video on Atlanta, and it will be made available for our Mission Smile and Stock Advisory members, because some of you have already asked about it. And see, the main part of these Mission Smile webinar, I just want to end on this note, is not trying to say that I bought this company and this has become this. I don't even hold this company. The main idea is to expand our horizon, to look at the investing landscape from as many different lenses as possible. And the best part is that we have so many really good members in the community who come and join the presentation and give their own view. So like Sachin and Akhilesh are far better than me on this particular industry. So it is indeed a great opportunity. So don't restrict yourself only to this presentation. What I would encourage all of you is that reach out to people in the community, and that is where you will gain the most. And look at our past presentations also, look at what we have done in the past. So many other companies we have presented. Some companies maybe like Intellect Designer, and we discussed a lot in today's presentation. In our YouTube channel, we have a video on Intellect Designer. A very close friend presented on it a couple of years ago. So you can look at that business. So there are so many ways you can learn and get yourself exposed to different kinds of businesses and different kinds of investing. That is the whole purpose of this Mission Smile webinars. Nothing else. We are not here to show that we are anything great or we have the best way. Idea is to learn and share our collaborative and learning. Each one of us will have some differential insights, and we should try our best to tap into that. Okay, with this, we come to the end of the presentation. Thank you so much, everyone. Some of you have given me DM related to our stock advisory services. Please reach out to us on email or on any other means. We'll take that up. Thank you so much. Have a nice weekend. Bye.